Good morning, everyone, and welcome to the Morning Bell. I'm Robert, and joining me, as always, are Lizzie and Steve. It's Friday, February the 6th, and what a week it's been in the markets. We've seen some serious turbulence across equities, crypto, and really just about every asset class. Lizzie, let's dive right into what's been dominating the headlines, because there's a lot to unpack here. We're seeing major stress in the crypto markets, some notable corporate challenges, and what appears to be a broader reassessment of risk across the board.
Absolutely, Robert. The crypto sell-off has been the dominant story, and it's been brutal. Bitcoin briefly touched $60,000, which is its lowest level since October of last year. We're talking about a $10,000 single-day drop at one point, which is just massive. What's particularly concerning is the sentiment indicators are showing we're at levels we haven't seen since the FTX collapse in 2022. Strategy, the company formerly known as MicroStrategy, reported a $12.4 billion loss in Q4, and their shares dropped 17%. This is creating real stress across the entire crypto ecosystem, and we're seeing it ripple into mining stocks as well. IRN and CleanSpark both reported disappointing earnings, and their shares took a beating. The interesting thing here is that while Bitcoin ETFs saw outflows of about $545 million, BlackRock's IBIT actually hit a daily volume record of $10 billion, which suggests we might be seeing peak selling or capitulation.
That's a critical observation about the volume. When you see record volume like that during a sell-off, it often signals that we're getting close to a turning point, though of course there are no guarantees. What else are you seeing in terms of broader market themes?
Well, beyond crypto, we're seeing some significant corporate stress. Stellantis is taking a massive $26 billion hit from their business overhaul, and their shares plunged 23%. They basically miscalculated EV demand, which speaks to a broader theme we're seeing where companies that went all in on electric vehicles are now having to reassess their strategies. The software sector is also under pressure, and that's spreading into debt markets, which is concerning because it suggests the pain isn't isolated to equity holders. On the regulatory front, Goldman Sachs is implementing Anthropic's AI model to automate accounting and compliance roles, which is notable because it shows how quickly AI is being adopted in critical financial functions. There's also ongoing concern about geopolitical tensions, particularly with US-Iran relations ahead of nuclear talks, which is adding another layer of uncertainty to markets.
Those are all significant pressure points. The Stellantis situation is particularly telling because it shows how quickly sentiment around EVs has shifted. Companies that were racing to electrify their fleets are now dealing with the reality that consumer adoption hasn't matched their projections. Steve, let's turn to the economic data. We've had several important releases this week, and we've got one coming today. What are the numbers telling us?
Thanks, Robert. Earlier this week, we saw some important employment and manufacturing data that painted a mixed picture of the economy. The ISM manufacturing PMI came in at 52.6 on Monday, which was significantly better than the forecast of 48.5 and above the previous reading of 47.9. This was actually a positive surprise because it moved us back into expansion territory above 50, suggesting manufacturing activity is picking up. However, the employment data was more concerning. The ADP employment report on Wednesday showed only 22,000 jobs added, well below the forecast of 48,000 and down from the previous 37,000. Then on Thursday, we got initial jobless claims at 231,000, which came in higher than both the forecast of 212,000 and the previous week's 209,000. The JOLTS report, also released Thursday, showed job openings at 6.542 million, missing the forecast of 7.2 million and down from 6.928 million. This suggests the labor market is cooling more rapidly than expected, which could have implications for Fed policy going forward. Now, turning to today's release, we're getting the University of Michigan Consumer Sentiment Index, and this is particularly important given everything happening in markets. The last reading on January 23rd came in at 56.4, beating expectations of 54 and up from 52.9. If we look at the trend over the past several months, we've seen sentiment gradually improving from a low of around 50 in November to the mid-50s range now. This indicator measures consumer attitudes and expectations, and it has a medium volatility impact on markets. It particularly affects consumer discretionary stocks because it gives us insight into whether consumers feel confident enough to spend. Given the market turbulence we've seen this week and the crypto sell-off, it'll be interesting to see if consumer sentiment holds up or if we start to see some deterioration. The survey captures both current conditions and future expectations, so any significant miss could add to market concerns about economic momentum heading into the spring.
That's a comprehensive look at the data, Steve. The divergence between manufacturing strength and labour market weakness is definitely something to watch. If consumer sentiment starts to crack, that could be another warning sign. Lizzie, let's shift to crypto trends. Given everything we've been discussing about the sell-off, what's your outlook for Bitcoin, Ethereum, and Solana heading into next week?
The sentiment is decidedly bearish right now, Robert, and we need to be realistic about that. Bitcoin is showing all the signs of being in a capitulation phase. We briefly touched $60,000, and while we've bounced back above $65,000, the technical damage is significant. Some analysts are suggesting we could see further downside to around 64,000 or lower before we find a real bottom. The volatility fear gauge hit levels we saw during the FTX blow-up, which tells you how stressed the market is. However, there are some potentially positive signs. One indicator shows Bitcoin is the third most oversold it's ever been, which historically has preceded violent moves to the upside. The institutional picture is mixed. While we're seeing outflows from Bitcoin ETFs, the record volume in BlackRock's IBIT suggests we might be near peak selling. Large Bitcoin holders have reduced their share of supply to a 9-month low, which could mean weak hands are being shaken out. For Ethereum, the situation is equally challenging. We've slipped below $2,000 and holder confidence is being tested. Vitalik Buterin's sale of 6.6 million in ETH didn't help sentiment, though he did flag those withdrawals in advance. Solana is holding up relatively better with a more neutral outlook. There's actually some positive development happening on the network, with Multiliquid and MetaLayer launching an instant redemption backstop for real-world assets. The key factors to watch next week are macroeconomic conditions, particularly any signals from the Fed, liquidity levels in the crypto market, and whether we see continued institutional selling or if buyers start to step in at these lower levels. The risk is that if broader market sentiment deteriorates further, we could see another leg down. But if we've truly hit capitulation, this could be setting up a tradable bottom.
That's a balanced assessment, Lizzie. The next week or two will be critical in determining whether we've seen the worst of this sell-off or if there's more pain ahead. The institutional behaviour will be key to watch. As we wrap up today's show, I want to remind everyone that markets go through these periods of stress, and it's important to stay disciplined and focused on your long-term strategy. The data we're seeing shows a complex picture with manufacturing improving, but employment softening, and consumer sentiment will be an important piece of the puzzle when we get that reading later today. Remember, do your own research and consult with financial advisors before making investment decisions. Thanks for joining us on the Morning Bell. I'm Robert, along with Lizzie and Steve. We'll be back next week with more market analysis and insights. Have a great weekend, everyone.